Scott Nachtello here with OKC Home Realty, with a quick video about the Oklahoma City real estate market. And in this video, I want to talk a little bit about rental rates versus sales prices. Now, when I first came to Oklahoma City, that was back in the 90s. Real estate was incredibly cheap. I mean, I bought a lot of properties that were, $15,000 to $30,000 that I still hold to this day, and it was an incredible buying opportunity. I didn't know how incredible it was at the time. Right now, it's a little more of a seller's market, and it's getting a little more difficult to find those good deals. But a lot of people are compared to Oklahoma City to other markets like California or the East Coast, and they still think that we have incredibly good deals on real estate. So I've noticed that there's two basic types of properties that a lot of out-of-state investors are looking to get into, and one of those is newer homes in nicer neighborhoods, and these are homes that are usually less than 20 years old, and they're located in nice areas such as Edmond or Yukon or along the I-240 corridor in South Oklahoma City, and kind of in the suburban areas of the city where you have newer homes being built, and these have good schools, and with newer properties you end up with quite a bit less maintenance costs, and your quality tenants is definitely a little bit better, and so it's good if you can find a deal that is I call it a 1% deal, but basically that the gross monthly rent is 1% of the total purchase price. That's getting a little bit hard to find. The other type is older homes in a little bit older neighborhoods, and these houses are generally more than 30 years old, and they're in more working class areas. A lot of these are Section 8 properties, and you can get a little higher rate of return on your real estate. But what you do find is that it's a little more management intensive, and you wind up paying more in maintenance and make readies and things of that nature. So again, I think and you can still find deals that will cash flow, where you can get in, and your net operating income for the property is going to, and that's basically your the money that you make less your expenses is going to cover your mortgage. Now, that's not going to work for every property, and you have to do your homework, but you can find those deals.